All right, let's jump straight into this explainer. Today we're going to unpack a pretty wild strategic pivot. We are looking at TaoWeave, a company that recently totally restructured its corporate identity to focus on the decentralized AI ecosystem, specifically the BitTorrents network. But here's the hook. They are making a sudden, aggressive leap away from just holding digital assets right onto the real-world factory floor. Let's explore exactly why they're shifting gears and what this means for their future. To start making sense of this, we've got to look at one very impressive number, $1.7 million. That was TAOWeave's net income for the first quarter of 2026. Now, if you're a shareholder reading a quarterly report, turning a profit like that after previous losses, it looks like an absolute home run. It looks like the business is just booming. But hold on a second. Right behind that glossy success is a much tougher reality, a $475,000 adjusted EBITDA loss. And that negative number is absolutely crucial because it reveals that their day-to-day core operating activities are actually still burning through cash. Let's be real, they just aren't making money from their traditional services. The stark contrast is this, that Q1 profit was driven almost entirely by a massive $2.2 million unrealized gain from simply holding TAO tokens. Their profitability is totally relying on crypto market volatility instead of actual predictable operating revenue. It's a paper profit. If the token price drops, well, that net income vanishes instantly. And for any publicly traded company, that is a highly dangerous reliance. So here is our roadmap for today. We'll cover 1. TAOWeave's new revenue strategy. 2. The limits of a pure treasury model. 3. Entering the physical AI market. 4. Synergy with Manaco Labs. 5. The value of their $1 million investment. And 6. Shareholder value and the future. Section 1. TAOWeave's new revenue strategy. Originally, TAOWeave's whole identity, coming out of their legacy business under the name Oblong, was built on being the first publicly traded company dedicated purely to acquiring and holding TAO tokens. They pitched themselves as a passive vehicle, a way for traditional Wall Street investors to get regulated exposure to decentralized AI without the headache of setting up crypto wallets. But now, they are aggressively pivoting from sitting on a digital treasury to becoming a highly active AI commercialization platform. Section 2. Limits of pure treasury. The flaw in that initial design becomes obvious pretty fast. A pure treasury model is just incredibly tough to sustain for a public company. Sure, they earn staking rewards on their TAO around $86,000 in Q1, but that just doesn't generate the consistent, predictable cash flow you need to cover structural costs. Things like NASDAQ listing fees, legal compliance, everyday corporate overhead, they eat through those yields fast. And you can't exactly pay your accountants in unrealized digital asset gains, right? Section 3. Entering physical AI market. Now, when we say physical AI, your brain probably jumps straight to, expensive humanoid robots walking around a factory. But actually, scratch that. That's not what this is. Physical AI here means taking the thousands of existing dumb cameras that factories and warehouses already own and making them smart. It's software that turns a passive video feed into real-time intelligence that can spot bottlenecks and automate workflows, all without requiring a single piece of new hardware. And the financial motivation behind choosing this specific sector? It is absolutely massive. Industry projections show this market exploding from a solid $82 billion in 2025 to a mind-blowing $1 trillion by 2033. Enterprise companies are basically desperate to optimize their physical operations right now, and TAOWeave sees a massive, untapped pipeline of recurring revenue waiting to be grabbed. Section 4. Synergy with Manaco Labs. To get a slice of that trillion-dollar pie, TAOWeave isn't starting from scratch. They're partnering up, and this creates some serious synergy with their existing portfolio. You've got Manaco Labs operating on BitTensor's Subnet 44, bringing award-winning computer vision tech to the table. But brilliant tech often hits a brick wall trying to land big corporate contracts. That's where TAOWeave steps in. They bring the Wall Street credibility, the regulatory compliance, and a massive North American enterprise sales network left over from their legacy days. It's a perfect marriage of decentralized innovation and traditional corporate muscle. As Max Septi, the CEO of Manaco Labs, points out, enterprise clients don't just buy software, they buy accountability. Bringing decentralized AI to huge institutional clients requires a bridge. They want audits, they want compliance, and TAOWeave provides exactly that corporate bridge to accelerate this tech into North America.
Section 5. Value of a $1 million investment.
Let's talk about the actual mechanics of this deal, because the strategic value of this $1 million investment is huge for expanding their future revenue platform. This isn't just handing over cash. It's a calculated $1 million safe investment. Notice the warrant package. They're giving Menaco up to 300,000 shares at premium tier prices, but capping their ownership at 9.99%. Why? Because it directly aligns Menaco's success with TAOWeave's stock performance, all while protecting current shareholders from heavy dilution. In return, TAOWeave gets exclusive distribution rights in North America. So, the strategy to expand this operating platform boils down to 3 clear steps. Step 1, TAOWeave locks in those vital distribution rights. Step 2, they use their public market credibility to deploy Menaco's AI straight to enterprise clients. And step 3, they start earning a net revenue share and referral fees. This directly fixes their core vulnerability, finally generating the predictable, recurring cash flow that the pure treasury model was completely missing. Section 6. Shareholder value and future. So, what does this massive corporate pivot actually mean for you as an investor? Well, it completely rewrites the value proposition. The old model was high risk, a pure digital asset play, where if crypto tanked, TAOWeave tanked. This new model? It's balanced. It anchors the business with steady, predictable cash flows from enterprise software contracts while still keeping the massive upside potential of that digital treasury. At the end of the day, shareholders don't lose the huge upside of that 25,000 plus TAO token treasury, which is worth millions. But now, it's protected. It's backed by an active, zero-debt operating business. They can literally use their staking yields to fund growth, creating a highly repeatable playbook to take other decentralized AI projects and commercialize them for Wall Street. It's a massive shift in how they generate shareholder value.
Which leaves us with one really big question to chew on. If this physical AI gamble with Menaco Labs pays off, and they actually turn everyday camera feeds into steady enterprise revenue, has TAOWeave just written the definitive playbook for how Web3 technology finally scales out of the crypto bubble and into massive, everyday corporate adoption? It is definitely going to be a fascinating pivot to watch.